Hello, this is Brian Shannon from AlphaTrends.net. Today is Friday, the 25th of April, 2008. On Wall Street today, we're looking at shares of Apple, symbol AAPL. The stock here obviously has been in this huge rally for the last several years, since breaking past some resistance, really back in early 2004. The stock has been just one of the best performers there has been over the last several years, and first saw its first signs of trouble really back in January of this year when it had this big long red candle dropping from a high near 200 during the month down towards about the 130 level or so. Obviously, the stock has recovered quite nicely from there, and if we take a look at a simple Fibonacci tool, what we can do is we can take the high point that was reached back in late December of 2007 to the lows that were reached in February. And what we see here is this is the range basically from this high to that low. And what we would do is then look at retracement levels. Where does this market likely to find some resistance along the way? Well, the school of Fibonacci thought is that typically if the stock can rally, at least this is the first level, about 1/3, 38.2%. Then there's the 50% retracement, and then what's known as the golden mean, the 61.8% level. So right now, basically, we're right at that 2/3 retracement. So this is a kind of a critical area as far as the overall health of Apple goes, according to Fibonacci theory. And my feeling on Fibonacci is that enough traders look at it that it tends to be a self-fulfilling prophecy. I don't really believe that there's a universal order to stock trading based around Fibonacci numbers, but enough people look at it that certain institutions will stop buying when it gets there. Other institutions will start to sell to some of their positions. So it tends to act as a self-fulfilling level of resistance on the way up. Now, it doesn't mean it will act as resistance, but it's a potential area. Now that we've had the good news come out, the stock absorbed an initial shock down to about 154 in the after-hours market right after the earnings were released, but it recovered nicely, obviously, on Thursday, closed right up near those highs. So I think 170 is going to be a critical level for this stock. Now, we can take a look at another interesting technical tool, which is called the VWAP line, the volume-weighted average price. If we take a look at since January 1st, what I'll do is just drag the line straight across, and you see the line forming, and that line is coming down right now, meaning that as the stock declined, the average price that it was trading at for at that point was declining as well. Well, the buyers took control right here at about 140 during the course of trading in 2008, and you can see then the average price started rising, and that level acted as support near about 143. So now we've got a stock in a real nice uptrend. I think that if you're looking to initiate a new position, I think you're probably a little bit late, and you want to wait for a pullback. I think a pullback would, ought to be contained near that the 200-day moving average, which is right now at about 153 or so. So it looks a little bit extended. It's in a great uptrend. It's a great brand, and when the stock drops, it doesn't seem to want to drop for too long. So I think if you can get a better opportunity to buy it, maybe closer to that 200-day moving average, it would be a lower risk level once the emotion from this earnings report has kind of diminished